Hello and welcome to State of the Economy. Today we have with us a special guest, Nick Stern, who's professor of economics. In fact, he holds the I.G. Patel chair at the London School of Economics, and he recently visited China, and he's now in India to talk about whether India can indeed go to a double-digit growth rate of 10% plus. This is a subject which everybody's in India is also talking about with some amount of anxiety because there is a global slowdown and there is a general slowdown in India too. India's economy is not showing the uptrend in growth of the kind that we saw during the boom period of 2002 to 2008. So to discuss that and much more, we have Professor Stern with us. Welcome to our show, Nick Stern. So tell us, what are your prescriptions? You're speaking about whether India can get to 10% growth. This is something which is exercising the government, the new government which came to power in 2014 with a big majority. So they have the power to do reforms, come up with policies to drive such a growth. So tell us.
Well, first, Venu, thank you very much for having me. There are examples, or maybe one example, of a big country that has achieved 10% growth rate over an extended period of time, and that's China. They're moving away from that now, more like 6.5%. So India is already growing faster than China. But can India have a period like China had of 10+%? Now, I look at this like a professor of economics. When you look back, and I've been coming to India for well over 40 years now, so I remember the so-called Hindu rate of growth, which was 3.5.
3 to 3.5%, yeah.
Call it, let's be generous, call it 3.5.
3.5, yeah.
At that time, in the 60s, 70s, the savings rate was between 15 and 20%.
Yeah.
Call it 17.5. It was, so you got 3.5, which was the growth rate, was one-fifth of the savings rate. Now look back the last few years. The savings rate has been between 30 and 40%, not quite made 40, but between 30 and 40%.
Currently at 30%. Roughly.
Currently at the lower end of that range.
At the lower end, yeah.
But it's been a bit higher in the previous years. So let's just keep it simple, call it 35%. Divide by 5 again, your growth rate is 7%. So there's a lesson here. It says that the growth rate divided by 5, the savings rate divided by 5, now say 35%, divided by 5, 7%, it takes you to the growth rate. So go from savings rate to growth rate divided by 5. What's special about the number 5? Well, it gives you the relationship between extra capital and extra output. It says
the incremental capital output ratio.
Exactly right. So, or 1 over it is the incremental output capital ratio. So if 1 unit of capital produces a flow of 0.2 or 20% of income each year, that's what we have. That's 5. Incremental capital output ratio is 5, and the incremental output capital ratio is 0.2. So this 5 is not a mysterious number that we're dividing by. It's about the efficiency of capital. If you bring that number down, you're making capital more efficient. So if you bring it down from 5 to 4, you're saying 1 unit of capital gives you a flow of 25%. 25, not 20. That's an improvement in the efficiency of capital. So here's the question. If the growth rate is the savings rate divided by the capital output ratio, can you increase the savings rate? Can you reduce the capital output ratio? Can you increase the savings rate to 40% and bring down the capital output ratio by increasing the efficiency of capital to 4? If you can, then 40% divided by 4, there's your 10%. So this little simple arithmetic has actually helps you organize ideas. Becomes, can you increase savings rate and keep it at 40% or more? Can you really increase the efficiency of capital? Then you ask yourself, how do you do these things? And we can talk about how do you increase the savings rate and how do you
How did it happen in China? You studied China also, yeah.
Well, China ran savings rates of close to 50%. And
And they had this for about 20 years.
they did.
10% growth.
They did. So had very, very high savings rates. Now, how do you get those very high savings rates? Actually, I think the story in India and China is quite similar, although mechanisms are different. In China, tremendous amount of the savings came from firms. Because of the ownership structure, firms didn't have to look at their shareholders all the time, so they could just save it. Now, in India, when the share of profits have been high, the share of savings have been high. Of course, households save too, but firms tend to save more. So one way of looking at this thing is if you want to keep up your saving rate, you have to keep looking at the share of profits. You need to make profits in order to. At the same time, you can talk about how do you increase household savings rates? How do you make it more attractive to households to save? And that's another set of questions. But you can see how we organize this discussion. It's first the savings rate and then the efficiency of capital. You can sometimes, for a while, have foreign savings. But there's a limit to how much and how long.
But China was largely domestic savings driven.
It was. There was some capital inflow, but it was some capital inflow, but it was largely
Tell me,
domestic.
Nick.
But the efficiency of capital, of course, is a big question also.
Now, from what you just said, with the numbers that you quoted, it seems logical that India should get to closer to 10% GDP growth with some improvement in the efficiency of capital and some increase in savings rate. The two
It's possible.
possible, right? But there's another narrative which is being thrown at us these days, which is that the era of high growth, near double digit, even in emerging market economies, it's kind of over. Partly because demographies are changing even the emerging economies, in the sense the rate of increase in population growth, or therefore the rate of increase in the workers coming into the, it's not the same as before. So if you purely look at that as an output, incremental output generating source. So I've read this in research papers that demographics are changing. So partly because of that, growth rates won't be the same, global growth rates. Yeah.
That argument is correct in the sense that when we talk about the productivity of capital, which exactly is in this discussion, if more labor is available to marry with that capital, then that capital is more productive.
More productive. Yeah.
So that's a correct argument. But
it's an aggregate of capital and labor, so
exactly
the labor component brings it down. Yeah.
It makes the capital more efficient, or produce in the sense that it produces more output. But we have to ask the question then, whilst that argument is true generally, and I think it does apply to China, does it yet apply strongly to India? I think the answer to that is no. India's workforce is still growing quite rapidly, and India has a huge potential workforce that it doesn't use very well, and that's women. So India has, I think, the potential to avoid that particular constraint. Of course, that means that you want that workforce to be as productive as possible, so investing in their education and their health makes
It's
makes a
interesting
big
you're saying
difference.
this, because recent trends show, Nick, that women are moving out of the labor force to get educated. So
Yes.
there's a decline in labor participation of women in rural areas. So
But that in a sense, is an investment.
it's an investment.
That's making the
Some people see it as a future investment.
It's coming. I've been working in one village in Moradabad district of UP for more than 40 years. And we have data going back to the 1950s. And we're finally, after a long, long period of not much education, starting to see a strengthening in the education of women in that village. And whilst education has not yet been a big driver of economic activity, in the sense that those who are educated find much better activities, more productive activities, that's probably going to begin pretty soon. Probably first.
So that might support your argument that we still have to really get to that peak for a longer period of time.
I think
peak growth rate.
I think India can have a 10% growth rate for the next 20 years or so, but I think it's probably the outside. I wouldn't put my money on it because we have to do those two things. That India has never really had a 40% savings rate. The closest it got, I think, was 7 or 8 years ago to about 38%.
Yeah.
And so
I would say about 35, 30, yeah.
it could, if it keeps at 35, you can see it would have to make the efficiency of capital much stronger to get to 10%. It would have to bring the past incremental capital output ratios, which are 5, down to 3.5, because if you divide 35% by 3.5, here's your 10% growth rate. So I think if we probably agree that 40% sustained savings rate in India is a bit of an ask. I don't think that's very likely. And that puts extra pressure on the efficiency of capital.
Capital, okay.
Yeah.
And what are the other reforms that India should do to improve the efficiency of capital?
I think,
Since that's an important component.
absolutely right. So better to focus our attention.
Yeah.
Get a 35% savings rate if you can. It could be there. It could be there. And focus on the efficiency of capital now. Well, infrastructure is fundamental. I mean, if power is very expensive or it goes off all the time, if in your transport system a lot is deteriorated along the way, if you can't get your goods through the ports very quickly, all these things could be because physically they're inferior or because they're managed badly or corruptly. So infrastructure is absolutely key to the efficiency of capital. I think also the quality of management, and India is investing in that. But also, and I would stress this, the functioning of cities.
Cities, yeah.
Cities where you can't move
Here
and
I
you
would like
can't
to
breathe
say,
are
Nick,
not productive
for
cities.
some reason, India has not, compared to many other emerging economies, take China. In the last 25, 30 years, China would have actually constructed new cities, maybe 15 new cities. And in India, you hardly see 2 or 3 new cities having been built over the last 20, 25 years since we launched reforms in the early 90s. So since you study India and you know India so well, what do you think is the reason that India is not able to create new urban centers?
Well, one reason is the public finances. India has a lot of pressure on the public finances. It's not terribly good at raising revenue. I mean, the GST will help somewhat. But you have to have the ability to finance cities. So you have to have a good...
Long-term financing, is it?
Yes. So you can borrow, but if you're going to service those loans, you have to have some revenue. So there's a real challenge in thinking of how cities can finance themselves. I think congestion charging, as we move more into a digital age, charging for congestion. So if you want to take your vehicle into a city when it's very crowded, and of course then your vehicle slows down all the other vehicles, you're imposing your cost on other people, you should pay for that. And I think that congestion charging
like you do in London or...
We do it in London a bit. Other people do it better than we do. I think that would be a very important part of the...
And we don't seem to have any... We don't seem to have a robust municipal governance system or municipal politics. A kind of... a lot of other countries... They at the municipal level, they do a lot of the work. And here... there is no municipal politics worth the name,
It varies. From time to time, you get cities which are run well for a while, but it is a problem. I think having a good tax base for the city is also very very important. In the old days, you had octroi where you had to pay some money to take your goods into the city. That's not a very efficient tax, but a well-run land taxation would be, and suppose the state invests to make a city much more
Can I ask you one question here?
Then there's an increase in income there, which is associated with the action of the state in making that investment in local infrastructure.
Here, I'd like you to come in and tell us, China, for instance, you've just been to China, you're coming from there. China has been very successful over the past 2 or 3 decades in creating land markets, again at the level of, at the provincial level. They have raised revenues from land. They have created what you call trunk infrastructure, and then they have invited the private sector to then build it further, and then they have successfully raised a lot of money. I'm told about 40-50% of the money comes from land.
Yes.
So
it's a mixed blessing. I don't want to give the impression that they've done it very well, because what's happened is that because the state has had ultimate ownership of the land, they have been able to raise money by selling land. But what has happened is that since that's so important in their revenue, what they've had is cities which are absolutely spreading out, and that's very inefficient.
you mean they have overbuilt, is it?
Well, they've spread. As their cities have grown, the population density of their cities has gone down.
Okay.
So they've been sprawling. They've spread out. And one reason they've spread out like that is that the government, looking for money, sells the next, as it were, thing out there on the circumference.
It's not the model to follow in India.
I'm not sure. I think you want a better taxation of...
Are you impressed with the smart cities policy that this government came up with 2 years ago?
I think
because I hear from the market participants that nothing much has happened on that front. Really nothing much.
I think it's a very important idea. Cities where you can move and cities where you can breathe are clearly cities which are much more productive than cities where you're stuck in a traffic jam and breathing causes you health problems. Clearly, moving and breathing safely is very good for productivity. I mean, it's very good for life and well-being. And smartness can give you that. I mean, you can do congestion charging. You can make your infrastructure much more efficient by managing it well. And,
use technology to manage.
Oh yes, if you absolutely. I mean, for example, there's an Israeli firm that's very good at finding leaks. So they'll have probes at different points on the water system, and just with some calculations, they can say your leak is just there, which means you can fix it very quickly. I mean, that's a small, simple example, but that kind of technology really can make cities much more efficient, whether it's looking after your water supply or it's...
But you do believe that India needs to create more cities?
Yes, and make them much smarter.
Much smarter.
And in a sense, India now has India is perhaps where China was 20 years ago. Now, if you ask your Chinese friends now, if you go back 20 years, would you have done exactly the same? And they will all say no. They'll say, in those 20 years...
So India can learn from other experiences and not necessarily reinvent the wheel or something.
Or reinvent the problem. I mean, China has very congested cities with very bad air. Now, actually, the air in India is also bad, even worse. But they say now that we could have avoided so much of that by designing our cities better, by thinking about the pollution, and of course thinking about the emissions of greenhouse gases and carbon dioxide. So China actually has some lessons to offer. Now, India can take those lessons by looking. Actually, India can take those lessons too by talking to its Chinese friends. And
what do you think about when you speak about taking our growth rate up to, if not 10%, say closer to 10%, even 8.5%, 9%. So what's your view on ease of doing business? So India doesn't rank very high in the ease of doing business, and doesn't rank very high on enforcement of contracts, doesn't rank very high on the quickness of speed with which you can start businesses, buy land, and multiple agencies. So
or how often the power goes off, how quickly you get your goods to the ports.
So do you see, you've been coming to India for so many years, do you see improvements there over the last 20 years or so?
Yeah, I've been coming for 43 years now.
So
I think it is changing, but it's still true, as we all know, that the functioning of the infrastructure, the functioning of professional relationships, financial relationships, is weaker in India than a number of its competitors. So I do think, when I was chief economist at the World Bank, we used to have studies of the investment climate, we called it, which was a lot of things. Partly the ease of doing business in the formal sense, how easy it is to get contracts enforced. Well, in the Indian courts, you might have to wait for 20 years for a legal case to be settled. That does matter. But the infrastructure is very important part of that. Mutual trust is very important. So I think working explicitly on that, the standards of firms which have very high standards eventually will be firms that people trust, want to go to. The corrupt firm might make a very short run gain, but in the long run you wonder whether it really will be a sustainable activity.
And what about foreign investors complaining about stability of the tax regime or lack of stability in the tax regime or predictability in the tax regime? Do you subscribe to some of those complaints that keep coming?
What you want is a broad base for taxation, low rates and predictability. But you need the revenue. I mean, India really is going to need substantial amounts of revenue. And faster growing countries often have, one way or another, quite a high share of taxation in GDP, provided, of course, that taxation revenue is used well for health and education and infrastructure and so on. So I do think that an examination of that part of the story, let's call it the investment climate, which is a bit beyond the sort of the doing business, I think is extremely important to the whole story.
I wanted to ask you about this huge decision that the Prime Minister took last year on 8th November, demonetization. 86% of the currency was withdrawn. Now, it is, in a sense, it was a shock to the system. The remonetization is happening now. 70% of the currencies come back. So how do you see the downside, the short term, and the possible upside, which is not yet visible, but we are assured that there are upsides on the horizon. So how do you see this?
Let's start with the upside. Essentially, we were just discussing corruption, ease of doing business, the need for tax revenue, and so on, for a good, fast-growing, transparent economy. Well, for that to happen, you really need a transparent system of money flows. So if this pushes for greater monetization, then it seems to me to be a good thing. Okay. And of course, Aadhaar has given you now much more information about people in a positive sense. I mean, not to persecute them, but so their rights can be exercised. So, with the advancement
of larger transparency, improvement in transparency in governance. That's what you're talking
which
about.
is very good.
It's good
for growth. It's good for tax revenue. It's good for.
So that's an upside. Yeah.
That's the upside, and it's important. It's not quite a tangible, not so easily measured, but I think it's real.
So finally, Nick,
the downside is disruption.
Yeah, of course, that we all have experienced.
Yeah.
Finally, since I wanted to ask you, I can't leave you without asking a question on climate change, since you're the famous author of the 2006 Stern Report. Now, you have argued that countries which are on which adopt the green economy faster will be the bigger gainers, even in terms of growth. No. So, in that context, India, which has is India at a great advantage, considering that India is starting on a cleaner slate, compared to others?
Yeah, I mean, India's economy is, 1/4 or 1/5 of the Chinese economy, and India's emissions are 1/4 or 1/5 of China's emissions. Now, China is having to change radically it's the structure of its economy for all sorts of reasons. Particularly, they're concerned with air pollution, which is extremely costly.
You have praised China's efforts in going green over the last 7-8 years.
I praised China's efforts over the last 4 or 5.
For 4 or 5 years.
Yeah.
Yeah.
But the preceding
Yeah, of course.
15 years or so,
They were the biggest emitters preceding. Yeah, because
Absolutely.
they built huge infrastructure before.
they did.
So what should India do?
And now they're closing. When I over last weekend when I was in Beijing, they closed the last coal-fired electricity plant in Beijing. So they're having to get rid of old capital because it kills people.
Yeah,
You know, the burning of the coal kills people, and of course it emits the greenhouse gases as well. So China is changing, but China's having to cut back, get rid of capital. Well, that's
So India need not do that.
India need
India's
not do that.
at the lower end of the consumption curve, right?
Exactly. And efficiency, of course, is enormously important. And India can design for energy efficiency now much more easily than one could 20 years ago. The digital revolution is extremely important for energy efficiency. You know, you can move around peaks and troughs.
So you
of
suggesting India
demand.
could leapfrog to a green economy much better than others who had already built their infrastructure up to a point, you know?
Absolutely. And, you know, the fixed line, telephone line system in India was never any good.
Yeah,
When I first came to India in 1974, I used to think that I was sitting in an office, I used to think that 3 successful telephone calls in a morning was a very successul morning.
Sure.
You know, I mean, no one would tolerate that now. But India didn't solve that with a fixed line system.
Yeah.
Yeah,
So
India solved it with
just leapfrog.
mobile phones.
Yeah.
And
So same thing could happen in the green economy?
it could happen in energy, it could happen in transport, it could happen in city design. Actually, it has to happen in all those 3 things
All those 3 things.
together. We have to plan for it.
Plan for it, yeah.
Yeah.
Thank you very much, Nick Stern, for talking to us. Gave some good ideas for the government to listen. Let's hope they listen. That's all we have in this edition of State of the Economy. We'll be back with you next week. Thanks for watching.